Hello everybody, Michael Silva here. How much higher can this market press on given the current bifurcation that we're seeing? You can clearly see on the SP 500, looking at a year-to-date heat map, you have one side of the screen that's going up and another side of the screen that's obviously going down. The stocks that are going up are clearly the big mega cap stocks, where you see stuff like Nvidia is now up 174% wild year to date, which it had, I think, at the biggest single day market cap gain in history. Some news that I remember hearing: you have Meta that's up over 100%, Tesla almost 70% or 63%, and then you have some other big names there too. So big tech has been leading the way, which begs the question, well, how much further can this market press on? And that's what we're going to talk about in today's stock market brief. We're going to map out some key levels to pay attention to if the market wants to continue to press higher that can act as overhead supply. We're going to be getting right into it. Now, if you remember this chart, this is the chart of Bookmap. This is some software that I use to trade intraday. Bookmap gives my subscribers a discount. You still apply a data feed to it, and the data feed will give you, live access to the market data, and then it just applies a heat map where you can see the orders on the screen. And this chart was from the prior video I posted, and one of the levels that I wanted to put into focus was that 4240, 4250 level, because there's been a long period of time where this liquidity has been hanging out, and sometimes these orders can act as like magnets where price can get pulled to it. We also had levels down here at around 4,000 that are still currently holding. Now, if I bring up a current order book, this is a screenshot from today, the close of business, which was right, here. Boom. So this was today's trading session. You can see right here, where did price come up to? Well, price came up to just about that 4250, 4240 level. It didn't quite absorb it, but this is why these levels are so important to watch, as price continued to press through that. So the question now is, hey, are we going to get through that level and potentially pop higher? And if we do, what's another level to now pay attention to? And that level is going to be 4,300, clear to the upside. So I'll talk more about that specific level in a little bit here, but 4,300 now has been on the radar. As far as tomorrow's trading day, we got 4,240. That's the upper daily expected move, which puts us pretty much right back up here. And then we have 4,186, which is right about down here for the daily expected move. Now, also want to put into focus 4150. This level came in, which clearly is quite a bit of orders down there. So if price you see come slipping down there today or tomorrow's trading session, it might be a key area to pay attention to see how price works itself out in and around that area. Now, if I take a look at overall the SPOs, the ES, we're really not breaking too far from 4,200 yet. And you can see we're just kind of finally breaking out of the range. Now, today we did pull down into 4,200 exactly, actually, to the T. So it came down, touched 4,200. Now, this is interesting to me because is it starting to act now as a level of support? So if it today holds, if this low holds, that's a positive sign where the market could then press up, try to break through that 4,250, and then reach that area of liquidity at 4,300 for an extra push higher. So this is going to be key to watch going into tomorrow, as obviously a break below 4,200 would be more bearish, and that could open the door down to around the middle of the range, which is about 4,160, 4,150. And if you recall, I just talked about that level, 4,150, right, is one of the key levels there. So a break below 4,200 opens the door to 4,050, but as long as we can hold 4,200, that opens the door to head higher. Now, we do have a lot of data coming out throughout the rest of this week. We got JOLTS tomorrow, then we have ISM manufacturing PMI, and then we have more jobs data coming out on Friday. If you remember this chart, this is the SPY on the daily time frame. Remember, we got down here and we talked about when price was going up, how this could potentially be a bear trap, okay? A bull trap, sorry. And then price broke down to the quarter to date, and we talked about, well, this isn't quite a bear or a bull trap. So what would you have to see to be bullish? To be bullish, you want to get back above the quarter to date anchored view up. We got above the quarter to date anchored view up, and we laid out the situation where potentially you want to keep in mind, let me fix that, keep in mind the possibility for price to get back above it and open the door to fill these two gaps. Well, today we filled one of those gaps. We tagged a new high on the year, which was 422.58, and we still have about this gap right above us. And if you look back at this August peak over here, that's not too far off that 430 level, which lines up pretty closely to that 4,300 on ES that we just recently discussed just on these prior slides. So the door is still open, obviously, to press on higher. But like I stated, here we have a lot of bifurcation in the market where these are the big names, right? I'll just do squares. These are the big names that are really holding this market together. So what happens if these names start to get hit? Well, that can put obviously a lot of pressure on the overall market. Now, if I zoom this into the 15-minute time frame, this is a flag pattern that I was watching earlier on in the trading session, right around in this area, and we broke out of that. Now I'm just redrawing this out where price, yeah, it was unchanged today. It was down a little bit throughout the day. The Qs started up higher, but then they finished, a 0.5% up or something like that. But I want to call out we're overall we're above the 5-day moving average. We're above the month-to-date anchored VWAP, which we have one more day in the month. We're right at the week-to-date anchored VWAP. We're slightly below it, and we were really digesting this prior run, which could be a bull flag. And if you look at like something like the RSI, I don't have it on my screen, but this high and this high, if I was looking at the RSI, we actually had a high and a lower high, creating what's known as a negative divergence. And we call that out earlier in the morning if you're in the Discord group. And well, price started to just back off, but it wasn't anything honestly too crazy in my opinion. This was more of a consolidation, and it really became more clear as it was starting to wedge and get, remember, expansion leads to contraction. When it started getting very tight, then we saw the breakout. Now, what I'm looking at is we have a high, we have a lower high, right? And we have these all connecting. So if we start getting back above this level over here, the week-to-date anchored VWAP, I think that opens the door right to the daily expected move going into tomorrow, which is 423.08. Now, if we get even more strength through that, that opens the door, obviously, to head higher to potentially even the weekly expected move. I don't know if we're going to be able to get there tomorrow. That'd be a very large trend day going into tomorrow, but you never know. It's end of month. Sometimes we get end of month markups. So this would be the level that I'm looking to clear going into tomorrow's trading session to be more bullish. And then if it breaks down through it, obviously become a little bit more bearish. All right, so you want to see how this consolidates, where price opens. If it opens here, I'm not necessarily trying to chase it. I want to see if price wants to pull back a little bit, maybe create a higher low and so forth, and then start to go higher like that. So you got to be a little bit more tactical. Remember, tomorrow at 7 a.m., that's Pacific Standard Time, so 10 Eastern Standard Time, this report comes out, and if you're in an intraday trade, volatility all of a sudden will go like boom, 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 and really quickly, most likely when those reports come out. So just be aware of that. If you have tight stops, chances are you'll get shaken out of positions. So just be aware of how price is shaping up prior to that, and then how it digests after that move. The 11 sectors looks today seem to be more risk on for the most part, even though remained unchanged, where you had consumer discretionary lead the way, and then you had like utilities towards the bottom and consumer staples continues to get hit to the downside, which are more safety type assets. Now, what really held the S&P 500 back today was financials and energy, but these were down significantly more earlier on in the trading session. Energy for sure was. Financials was down about 0.5% to 1% intraday, and the energy was really led by oil. Oil got completely crushed today. This is still, in my opinion, sniffing out a recession around the corner. It's been getting completely just obliterated, down 4.42% just today. So as you really look at the overall broad view of multiple markets, you can we'll just do that. Let's take a look here, right? People are very bullish in May. So if we look at month-to-date performance and we look at all these different assets, well, the SPY is only up 1%, right? It's only up 1% for the month of May, where, the Qs, they're up 8.5%. Well, how's IWM doing? Well, IWM's flat. It's flat for the entire month. Well, how's the industrials doing? Industrials are down 3%. Financials are down over 3%. Energy is down almost 9%. All right, semiconductors, okay, this is the big one right here. Semiconductors are up 20%, led by the reporting on NVIDIA. Okay, Bitcoin's even down 5%. The dollar is doing better than the S&P 500, all right? It's up almost 3% month to date versus the SPY being up 1%. That's pretty remarkable. Gold's slightly down. HYG is high yield. This is interesting to see. High yield is down, while the SPY and also the Qs are up, because these typically have a very tight correlation. And then you look at something like this, where the 10-year yield up month to date, it's up 7.18%. Now, backed off today, right? It was down. It felt pretty decent today, which may have helped the overall start of the move in tech, but being up this much and having, this correlation where you also see Qs are up this much, it is interesting because typically when you have a rapid rate of change in the yields, like 10-year yield, it puts pressure on growth stocks. And that's just something that we're not seeing as of this current moment. And then as that's taking place, you obviously see bonds down. It started up, it was up 1% today. So TLT was up 1%. So it outperformed the Qs today. It outperformed the SPY. It outperformed industrials. It outperformed small caps there too as well. And then also the same thing with IEF, which is more bonds, right? The shorter term. And then you have crude oil. So crude oil, whoa, what just happened? Oh, there we go. Crude oil is down almost 10% for just the month of May. And then copper futures are down 5.84%. So a lot of interesting bifurcation, like I said already, in the markets. This could be the AI hype, right, where that's all we hear about right now and are talking about most likely, or that's all we've been really hearing. But this is a very interesting monthly setup overall, where the sentiment does feel really bullish, but when you just view it like this, you're like, well, there's actually a lot of things that are actually falling apart or remaining unchanged, which to me it creates more opportunities obviously down the road. Now, if we take a look at the 10-year yield, like we said, it backed off slightly today, pushing the TLT up about 1%. So we're still, look at where we're at. We're really just, sideways channel, right? So we come to the lower end and we're bouncing. We're below all these key moving averages. So I'd still like to see price get back above these moving averages. Like I said, in the stage analysis, I still believe that we're in the early stages of stage 1, which means bonds typically go up, and then stocks and commodities typically go down. A late stage 6 is where bonds still go down, and stocks and commodities also go down. But when I take a look at like 2023 so far, we're up year to date. So as long as this low holds, and even down here holds, I still think that we're in the early ball game of stage 1 to late ball game of stage 6 overall. And then what I find very interesting here, is just look at these yield curves. Look at the nosedive today in the 10-year 3-month. Down, it's 186 basis points inverted. So you saw a steep decline here on the yield curve, even deeper into inversion. And then now you're 77 basis points inverted in the 10-year and 2-year curve. And you look at this 3-month. Look at this. Look at the move in this today, bringing us to another yearly high, coming in at 5.55%, which is obviously something that we haven't seen since 2001. So it's eclipsing, 2005, 6, 7, 8. It eclipsed over here 2017, 18, 19, 20. And now we're back over here. So this just rapid move is, concerning, right? We've seen banks explode basically because of what we've been seeing in the yield curves and various yields as well. And then the last piece over here is the dollar. The dollar has been breaking out to the upside. It held rather fine to just today, and you haven't seen anything really take place here in the S&P 500. So I think that there's opportunity obviously in gold if the dollar backs off. I saw the dollar back off earlier today, and it actually helped move gold. It was up around almost 1% on the day. I don't know if I added that here. GC, yeah, I got to add that into that list, but gold was up. So if this does start back off, I think that's going to really help gold, because if you just look at the correlation on like a 15-day, 30-day correlation from the dollar and gold, what you'll notice is that it's, a very strong negative correlation by like, 0.96, which means if the dollar goes up, gold is coming down. But if dollar goes down, gold goes up. And I think that that correlation could change over time where they can both go up together. But as it stands right now, if the dollar backs off, that kind of opens the door to see gold potentially higher. And now down here is the S&P 500, which is what I find interesting is, this went down, right? The dollar went up, down, S&P 500 goes up. Now we're seeing the dollar really push higher. And, technically you see the S&P 500 hitting a new yearly high today too. So overall, this is just a very, like I said, very bifurcated market. So you have to be a little bit on edge, a little bit on guard. But when we really zoomed out to like the 15-minute and the daily, I think that there's still opportunity to press higher, but you just need to be aware that if we get the wrong type of data or somebody comes out and says something about the debt ceiling, it's going to just unleash volatility on the markets, which could potentially create obviously some really strong opportunities for traders that are both bullish and bearish. If we take a last look over here at the zones, what you'll see here is the S&P 500 is starting to light up red again, giving us about 0.7% upside to about 3% downside. In this indicator. So the low is 41.03, the high is 42.36. And now these are dynamic. They're constantly changing. They could potentially press higher, obviously. The Qs are also lighting up red. You have XLYs lighting up red, and then you have the more defensive sectors lighting up more green, like XLP. XLU is towards the lower end, but it's more neutral. And then you have healthcare too as well, reaching down there towards the lower end. That's all I got for you on today's market cap, everybody. Have a wonderful night.